So you're thinking about buying your first home. That's awesome. But I get it. The whole mortgage process can feel like you're trying to solve a giant, confusing puzzle. Don't you worry. We're going to lay it all out for you step by step so you can feel totally confident on this journey. Okay, let's jump in. Yeah, does this feel familiar? It's completely normal. Buying a home is a huge deal. You're excited, you're probably a little nervous, and you're hearing all these new words and acronyms. Our whole goal today is to slice right through that noise and make it all crystal clear. Let's start at square one. What even is a mortgage? Stripped down to its basics, it's just a loan, a really big loan, for sure, that you use to buy a house. You borrow the money, and then you pay it back every month with interest over a number of years. It's really that simple. It's the key that unlocks the door to your new home. So when you make that monthly payment, what are you actually paying for? Well, it's usually broken down into 4 parts, and there's a handy little acronym for it, PITI. The P is for principal. That's the good stuff, the part that actually pays down what you owe on the house. The I is for interest. That's the fee the bank charges for letting you borrow the money. And then you have T and I for taxes and insurance. A lot of the time, your lender just collects that money for you and pays those bills on your behalf, which is actually pretty nice. All right, so that brings us to your first big choice. What kind of loan are you going to get? This is a huge decision, and it really depends on your own unique financial situation. So let's walk through the main options you'll see out there. First up, you've got conventional loans. These are sort of the bread and butter of the mortgage world, the most common type out there. They're perfect if you've got a steady job and a pretty good credit score. Now, the big headline here, if you can manage to put down 20%, you get to skip something called private mortgage insurance, or PMI. And trust me, you want to skip it. It's an extra monthly fee that protects the lender, not you. Next, we have FHA loans. Now, these are really interesting because they're backed by the Federal Housing Administration, which is a part of the government. This makes them a fantastic option for first-time buyers. Maybe your credit score isn't perfect, or maybe you haven't saved up a huge down payment. An FHA loan gives you the flexibility you need to get your foot in the door. And for our veterans, active duty service members, and their families, there are VA loans. Honestly, this is just an incredible benefit earned through service. For most people who qualify, it means you can buy a home with absolutely zero down payment. And on top of that, no monthly mortgage insurance. It's a powerful program designed to make homeownership a reality. And finally, let's talk about USDA loans. This is another zero down payment option, which is amazing, but it has a catch. It's all about location. These loans are specifically for buying homes in areas the government has designated as rural or, in some cases, suburban. You also have to meet certain income requirements, but if you qualify, it's a game changer. Okay, so let's put all of that side by side. Seeing it in a chart like this just makes everything click, right? Take a look at that minimum down payment row. You've got everything from 3.5% for an FHA loan all the way down to 0 for VA and USDA. Looking at it this way helps you start to see which path might make the most sense for you. Okay, so once you've kind of picked a lane with your loan type, the next piece of the puzzle is the loan's structure. We're talking about your interest rate and the loan term, which is really just a fancy way of saying how long you have to pay it all back. You'll basically choose between 2 flavors, fixed rate or adjustable rate. A fixed rate is exactly what it sounds like. Your interest rate is locked in for the entire life of the loan. It's predictable and stable. An adjustable rate mortgage, or ARM, is different. It starts with a lower introductory rate, but then it can change over time. It's a trade-off. Do you want long-term peace of mind or a lower payment right now? Then there's the term. The 30-year mortgage is by far the most popular choice because it spreads the loan out over a long time, which keeps your monthly payments as low as possible. But a 15-year mortgage is like taking the express train. The monthly payment is higher, for sure, but you will save a massive amount of money in interest, and you'll own your home free and clear twice as fast. All right, let's talk about the big one, the down payment. I know this is often the single biggest hurdle that trips people up. It can feel impossible, but it might be way more achievable than you've been led to believe. Can we just bust one of the biggest myths in all of real estate right here, right now? This idea that you absolutely have to put 20% down. It's just not true. Look at the reality. The average for first-time buyers is closer to 6%. And we already talked about FHA loans where the minimum is just 3.5%. That 20% number is a myth, not a rule. And here's some even better news. You might not have to save up every penny by yourself. There are literally thousands of down payment assistance programs out there. Your state, your city, nonprofits, they offer grants and special loans to help you out. You've got to do your homework here, but a quick search for programs in your area could save you a ton of cash. So, you've got all this knowledge, you're feeling good. Now it's time to actually go out and find a partner to help you finance this thing. It's time to shop for a lender. You're going to hear these two terms thrown around a lot, pre-qualification and pre-approval. They sound similar, but trust me, they are worlds apart. A pre-qualification is just a quick, rough estimate of what you might be able to borrow, but a pre-approval? Now that's the golden ticket. That's when a lender has actually checked your pay stubs, your bank accounts, and is giving you a real conditional offer for a loan. And why is that pre-approval letter so powerful? Because when you go to make an offer on a house, it shows the sellers that you're not just kicking tires. You're a serious buyer who has already done the financial legwork. It gives them the confidence that you can actually close the deal. When lenders start sending you offers, your eyes are going to go straight to the interest rate, right? It's natural. But wait, you need to look at a different number, the APR, or annual percentage rate. Think of it this way. The interest rate is the price on the sticker, but the APR is the out-the-door price. It includes all the fees and other costs, so it gives you the true apples-to-apples comparison of which loan is actually cheaper. We are in the home stretch now. Let's talk about the final moves you need to make and, maybe even more important, some common mistakes you absolutely want to sidestep to make sure everything goes smoothly. So as you get close to the finish line, please, please, please don't trip over these common hurdles. First, don't just go with the first lender who says yes. Shop around, compare offers. Second, and this is a big one, once you're pre-approved, your finances are on lockdown. Don't go buy a new car, don't open a new credit card. And finally, don't borrow the absolute maximum the bank offers you. Stick to a monthly payment that you are truly, genuinely comfortable with. And here it is, your whole journey, mapped out from start to finish. You start by getting your financial house in order, checking your credit, making a budget. Then you explore your loan options, get that all-important pre-approval, and you shop around for the best lender. Once you find a house and get it under contract, you'll lock in your rate, go through the final paperwork, and then you get the keys. It really is a clear step-by-step process. So there you have it. You're now armed with the essential knowledge you need to navigate the mortgage process with confidence. Look, the path to owning a home is a journey of many steps. But the most important one is always the first one. The only question left is, are you ready to take it?